let's talk about more macro pictures. Of course, we had that US inflation print hotter than expected in January. What does that mean for the Fed? And what are the key takeaways? Luca Santos from ACY Securities joins me now in the studio. Hi, Luca.
Hello.
So a couple of days since we've seen that hotter than expected print, but how have you seen the washout, particularly in currencies?
Cool. Yeah, we had 3.1% in January, so much higher than expected. And this, of course, fulfilled the movement for the US dollar, and as well as for the FOMC, the central bank, the Fed. Right. We had DXY, that's the US dollar index, reaching levels like 104,400, 104,500. So definitely a very strong US dollar in the first quarter. I think I came here last year and I've mentioned that we still have potential for a strong US dollar into the first quarter of this year, 2024. But what is actually catching me is what the Fed will do with that.
Yeah.
You know, because they were expecting inflation coming down and they actually cheered up like, okay, we are doing a good job, you know, inflation is coming down. And when we had a consensus lower than the previous, I was, okay, that seems good. But I was pretty confident that we still have a little bit of inflation from last year to be generated to this year yet. So basically dragging inflation to 2024. And it just happened as well. So we had as well, just today at midnight 30, if I'm not wrong, retail sales came very, very bad. You know, but the dollar strength will definitely continue to first quarter.
All right, so you talk there about what we're seeing in terms of Fed expectations.
Yep.
I mean, the retail sales overnight as well were, of course, more than expected, weaker than expected, I should say. So this is really just this story of bad news becoming good news and pushing these rate expectations, I guess, to the fore at the same time when we were like, when are we going to see a cut? When do you see one? Okay,
so there's so much things happening right now, right? Especially the inflation that came much higher, and this is the only thing. Well, not the only thing. The Fed is looking to all the FOMC members are looking to all the economic indicators, but the principal one, the major indicator, would be the inflation. And as we had 3.1%, you know, much higher than the consensus, I really want to see what Jerome Powell will say regarding this. Because we were between 3.2, 3.30, 3.1, and now we had a higher than expected. So I think he will address in some of those lines that is still needing more data. And now that last meeting they had, I think was last week, if I'm not wrong, most of the market was pricing a cut for March, then they cut for May, and now June. So every time that we have higher than expected news or something like that, economic indicators, the market feels like just pricing another month. So feels like market is postponed the cut from the Fed. You know, so I'm really, really interested to see what Jerome Powell will say next month, because that's going to shape the future, I would say, of this year and other central banks as well.
Yeah, and it just shows how, obviously they've said data dependent for so long, but how important every piece of data is. And that kind of belies to what happens in our markets too. I mean, yesterday that unemployment rate at a 2-year high. What do you think in terms of whether we could even in fact see the RBA leapfrog the Fed and cut sooner?
Cool. When we talk to the RBA, the Reserve Bank of Australia, there was a tricky here as well in the last meeting last week, right, on Tuesday. We had, of course, another pause, and what is most important here is that same as RBNZ and RBA, okay, both, what I will say right now, it serves for both of those central banks. There are some analysts like ANZ analysts and Bloomberg analysts that are stating that they may be a postponed rate cut for this year into quarter 3, quarter 4. So RBA was expected to cut in quarter 2. And now that we had this bad news and all of this bad data, most of the analysts are predicting a cut on quarter 3 or quarter 4 even though. My opinion is that I think most of probably in quarter 3, okay? And then from the Fed cutting first and the RBA and RBNZ cutting last, there may be a possibility of a stronger Aussie dollar against the US dollar. But for now, into the first quarter, I think we need to finish first quarter first. There's lots of surprises that can happen here, as we just had yesterday one. Tuesday one. So most probably Aussie dollar will continue to weakness against the greenback, but once they cut first, most probably 70 cents I think would be the way for
70.
Yeah.
And Luca, quickly, do you have any thoughts on the yen as we saw Japan into recession?
Okay, cool. Yen right now very weak, very weak. One thing that is dragging me attention is that the Japanese government bonds have been dumping, and all of those dumping, people selling those Japanese government bonds are getting the money through UK. So I need to study a little bit what is actually happening there, but this is pretty interesting for me. If we see, maybe in the future, the second half of this year, euro getting stronger and pound getting stronger, I wouldn't be surprised, especially against the yen. Now, for me, USD JPY is still a very bullish move. All right, so I still believe on a bullish move. We're gonna definitely break the 152 level that we just hit it in 2022, and now in November 2023 as well. We are on the way to there. And the big thing about Japanese yen and Japan is the NRP, the negative interest rates policy, and the Japanese government bonds and the yield curve control. It's all about what Kuroda says. It's all about what he thinks when would be ideal to bring rates up. But we had a very bad GDP, gross domestic product. It's not good on Japan. So with those data fulfilling this move, I think they have a very big journey before they actually, raise interest rates and Japanese yen actually becomes a stronger currency. But once it does, that's going to be a very good trade. Hopefully I can be in.